Hey there, it's Torey Hensel, Director of Idle Wealth, and today I'm answering some COVID-19 related questions put to me by urban.com.au. And for those of you who are unfamiliar with Urban, they're a fantastic national resource for the latest news, guides and events happening in the off-the-plan market. So for those of you who are interested in off-the-plan apartments or townhouses, I recommend that you check them out. But straight into it, first question. What are the best ways to spot opportunities for investing in property in a post-COVID-19 world? Right, starting with a softball question, I like it. Pretty simply, I'd say stick with the research fundamentals starting from the top down. Property has always been about identifying opportunities within a supply and demand framework, and the period that we're going through at the moment is just adding another variable to that equation. So I'd say it's important to try to understand that variable as best as possible and understand the impacts that COVID is going to have on the different property markets within the Australian market. Obviously, this virus is not going to affect what is a $7 trillion property industry in the same way across the board. So in terms of what to look for, we're targeting properties and locations that will likely avoid most of the negative effects of the virus, but benefit from the recovery. So areas that have a slightly older demographic where the majority of young professionals aren't highly exposed to hospitality and the arts and recreational jobs, and they're the ones who have been the hardest hit over the last few months. B, we're staying away from areas that are experiencing a flood of new rentals coming onto the market off the back of a number of Airbnb hosts converting their short-term accommodation into long-term rentals. And C, targeting locations that are in close proximity to proposed large public and private infrastructure projects that are yet to get off the ground. With the latest figures of over 600,000 jobs lost and a $230 billion COVID bill, the government's going to want to rectify that as soon as possible. And the best way for them to do that is with the approval of large-scale infrastructure projects. Counterintuitively, the best way for the government to make up ground on the deficit is to spend money creating jobs, which will in turn see more people off JobSeeker, free up income for discretionary spending, retail will pick up, inflation speeds up, and the government will reap the rewards in the form of taxes. Projects that were waiting for the red tape to clear might just get a green light across the board, and the property markets in direct proximity to these projects will be the beneficiaries. So definitely keep your eyes on the priority development areas. Okay, question 2. How has Idle Wealth been providing support for clients who are impacted by COVID-19? One of the most difficult and frustrating aspects of this pandemic, from the standpoint of investor at least, has been the murkiness of the policies from the government and the hyperbolic clickbait headline grabbing that we've seen in the media. It's been very difficult to pin down exactly what the policies have been and what the data is actually telling us about the property market and what the path forward is going to look like. And I think that the greatest value that we've been able to bring our client base has been a clear communication of government policy and the facts around the current market performance as we ascertain them. The majority of our clients are not on the rich list. They're mums and dads trying to build a foundation of wealth for their retirement. And to be honest, we haven't seen much protection of them in the media or in the government. And I feel that it's our responsibility to represent the voices of those investors who are also hurting during this time. Okay, question number 3. In Idle Wealth's latest Australian property update video about COVID-19, it was mentioned that Australia's property market has a history of performing well during global financial crises. Do you think that Australia's resilience will re-emerge this time around? If yes, will this resilience attract more international buyers? Right, well, I think the Australian market has already shown a significant level of resilience to the economic effects of this virus, and I think that it's worth unpacking why this has been the case. Historically, as the question states, the Australian property market does have a history of performing well through global financial crises, and I outlined some of those periods in my latest COVID video, which, if you want to check that out, head to my Instagram @IdleWealth. So I think the same reasons property has held up well in the past will hold true in this case. And because this is a pandemic crisis and not an economic crisis, remember our economy was in a great position before all of this happened. And I'm quietly optimistic that the additional variables of the government's economic stimulus and debt holidays for those that are in financial hardship will mean the number of hardship-induced sales will be far lower than in comparable economic downturns, thus reducing the risk of a crash that the usual suspects have been predicting for 20 years. As for international buyers, Australia already has a very appealing and economically diverse property market. So add in the extra variable of our positive national response and handling of the crisis, I think that can only improve buyer sentiment and confidence for sure. Actually, another possible reason that property has been so resilient through this time is that the hardest hit areas and the most affected have been the younger generation, so sub 30 years old, the waiters or waitresses, the bar staff, the arts and rec workers, air hostesses, retail workers, not your typical homeowner or investor. Though this might have a flow-on effect, potentially widening the wealth gap between boomers and millennials, it does somewhat insulate the property market from the dramatic unemployment spike that we're currently seeing. Okay, question 4. Since the nationwide lockdown, there's been a surge of online visits to off-the-plan property listings. When the pandemic is over, to what extent do you think that these online inquiries will translate into real life? It's difficult to say, I think. What the data is showing at the moment is that there is a very large increase in online searches, or there has been a very large increase in online searches, but these searches are not spread out evenly across the board. For example, there's been a 5 to 8 times increase in search volume for the more premium suburbs of Brisbane, Sydney and Melbourne. But there's been a decrease in search results for areas about a 30 to 40 kilometre radius from the CBDs. Also, another factor is how do you determine how many of those visits were serious buyers versus people shopping around because they're bored at home with nothing to do? With no physical inspections over the last month, it's unsurprising to me that there's been an increase in online traffic. I think what's going to determine how many of those visits and inquiries translate into real life will be a combination of the confidence in the market as the restrictions are removed and how quickly jobs can recover on the other side of COVID. Okay, question 5. As per your Australian property update in April, how much longer do you think things will get worse before they get better? Yeah, good question. Again, referencing my last COVID video update, I think that what the future holds for the Australian property market really depends on a few key events or scenarios playing out over the next few months. The worst case scenario, as we see restrictions eased and people getting back to some form of normalcy, is a second wave of the virus forcing another government shutdown. If this does happen, I think there'll be a much more severe impact than we've seen so far, with many businesses that are just on the brink at the moment, unable to cope with yet another hit to their back pocket. But on the other side of the spectrum, if the restrictions are lifted successfully, as they have been so far, and we continue to get back on our feet as a country, positive growth in the last quarter of 2020 would not come as a surprise. Okay, question 6, final question. What do you think will happen to residential property prices in the near future? I think it's still too early to say exactly what's going to happen over the coming months, and there will likely be varying outcomes in different markets across Australia. But on a macro or national level, there are a number of variables that we still need to consider. There's a possible second wave of the virus, as I mentioned, keeping buyers and sellers cautious. The banks are tightening up lending due to the uncertainty, which historically will have a negative impact on price growth. Low migration numbers will definitely impact population growth, and this will likely have a flow-on effect to the lower end up-and-coming suburbs. We've seen so far, and I think we'll continue to see strong performance around the median price points of higher grade suburbs that offer a mix of location, land scarcity and owner-occupier appeal. Again, this is where we're focusing the majority of our attention. Vacancy rates, particularly in inner city Melbourne and Sydney, will be very heavily impacted over the short term, with a flood of Airbnb properties coming onto the long-term rental market, and B, the exposure that those locations have to the most affected younger workers who make up the majority of tenants. But on the plus side, to finish on a positive note, with all-time low interest rates, investors at the moment are able to find cash flow positive properties in areas where it was impossible to find 5 years ago. And we're seeing a number of people with very healthy retirement balances moving their money out of shares and into property, seeking a more stable asset class, which from a supply and demand point of view will provide yet another buffer, reducing any sort of dramatic market fallout. I hope this helped, and thanks again for the opportunity to do a Q&A with you. I will see you next time. Bye for now.